Hey, Tom here, FlipAnythingUSA. I did a video recently, and this guy just seemed like a nice enough guy. I don't know him. First video I reviewed on him, he didn't pretend to know more than he did. A lot of people make careless predictions and pretend to have expertise they don't have. Notice he's got this new channel, Real Estate Ninja. Thought we would watch this, talking about mortgage rates. You know, I've been doing this for 41 years, and tell you what, you got to be a numbers guy. You got to watch the numbers. I make money on borrowed money, so of course I watch the interest rates all the time. Those of you that just got here, I've got a mentorship, FlipAnythingUSA.com. Urge you to take a look at that. Also have a book, it's been a bestseller on Amazon, Audible, and Kindle. It's called Wake Up and Smell the Real Estate. Those of you that are beginners in real estate, or even if you've been around for 20, 30 years, I've got investors and realtors that have been doing this for 20, 30 years that are very complimentary and tell me they've learned things that they didn't know were there. Been a very assertive investor for many, many years, and that's why I've got the experience that I got. It's the best thing I ever did! For those of you just getting here, if you don't know me, please hit that subscribe button, hit that like button. Got an interest in real estate, I promise you, I've done just about every facet of real estate you can think of. Houses, apartments, raw land, developed land, rezoned properties. I've done all kinds of stuff over the years that I've been in. You can kind of focus on any one particular niche, but there's a time for everything. And right now things are scary. When the interest rate jumps up like it has, and people say, oh, it can't go up any more than, you know, what people are saying, it couldn't go up more than to 3 or 4%. Listen, it can go up, it can go back up to 10%. When I started, it was 12, 14%. Just because you've never seen it doesn't mean it's not going to happen. I've been lucky enough to see all these different cycles over 40 years. And starting interest rates coming down from 14%, you know, you just got to watch it. You got to watch it like a hawk. So let's go ahead and watch him, see what the ninja has to say.
Hey everybody, Real Estate Ninja here. I hope you're doing well. I got a really interesting tweet that came out from Patrick Bet-David, and I want to talk about that today because it is exactly what I've been explaining about the collapse in real estate and how it's going to take effect. And it says right here, or Patrick says, current 30-year fixed mortgage is at 6.28%. It was 2.8% just a year ago. Literally almost exactly a doubling, right? Since most people buy a house based on monthly payment, here's what it means. Now, I've talked about this ever since this channel started in Economic Ninja, is that real estate only depends on the amount you're paying per month, because 90-something% of the people that buy houses are using a mortgage, right? So he says right here, this is what it means. A $500,000 loan at 2.84%, which it was last year, the mortgage rate is $2,460 a month, all right? $2,460 a month. Today, a $350,000 loan at 6.28%, which is the current rate, is $2,451 a month. So the same monthly payment. Yeah,
so what he's saying, and this is kind of the beauty and the curse of residential real estate. People don't say how much. Like, I'm an investor. I say how much, not how much a month. And a consumer, worry about the monthly payment more than anything. In other words, and like I say, what he just described, a $600,000 home was what at that payment, and now you can get the same payment with $350,000. That's what brings the prices down, because 90% of the people, and I say it all the time, the masses are the asses, because that's how they buy real estate. They don't say how much, they say how much a month. When they say, can I afford it? They don't think in terms of what does the property cost. They think in terms of how much is it going to be a month. It's the worst math in the world. In fact, if you're in my mentorship, when you get into the members area, I actually have an area here called calculators. And this is specifically what this is for. So you can play with those very numbers and, you know, see what the difference, you know, what point makes on your interest rate. I tell anybody, if you're serious about investing in real estate, get yourself an amortization schedule. You know, when I started, there was only paper ones. You know, we'd flip through it. But even a little paper one is fantastic. But you'll learn a lot about numbers. You know, I've had people that they had a certain number in their head they had to hear, and because I gave them the number they wanted, they gave me the interest rate that I wanted, and it'd be a very low interest rate. I'm talking about owner finance stuff, where if they just did the math, they'd realize that me giving them the price they wanted and them giving me my interest rate, they just sold me the property for 60, 70, 80,000 below market. The devil's in the details, and most people don't look at the details, and that's what happens. But let's go back and listen a little bit more what he garnered from Patrick Bet-David.
So it says right here, So the same people trying to buy a home, they have not got some massive bonus, pay bonus or raise, right? Their salary raise in the last year. So they can still only afford what they did last year per month, right? Which is around $2,400. That's a healthy payment for someone living here in California, right? Because I've literally met people that are paying $4,000 a month and they are literally living off of credit cards. And they're telling me, well, I have no choice. I'm like, yeah, you do.
People just buy so poorly. I mean, you have to look to the future. You have to consider that interest rates are going to go up if you have a variable rate loan. A good business person, they like to know where they stand. They like to be able to plan, and you can't plan with variables. You know, you can deal with some. You have to deal with some to a degree. But when you go to buy a property, if you're buying for your home, you want to get a fixed rate. You get in general, if you're somebody on a fixed income, you better get a fixed rate because you can't chance a variable rate. And what he's describing with his friends that are, upside down and, living on credit cards, they made some really terrible choices. When you're locking into a house, especially somebody young who's got kids, or maybe not established in their career yet, and they've got a limited income, they don't know where they're climbing the ladder and they're making more money here and there, but they're just kind of like an average buyer. You have to think about what your payment's going to be in the future. And a variable is not going to help you sleep at night. But the temptation is that when you choose a fixed rate over a variable, you're usually going to be paying about half a point over and above whatever the variable rate is. So the variable rate can be very tempting. I've stuck with variable rates for a very long time, actually been converting to fixed rates for that very reason, because I felt well enough over the last through 2000 to maybe a year ago, I felt good enough about the rates that I stuck to the variables, and you can see how it served me. In 2009, was buying commercial buildings, and I was getting rates of about 5.5%, right in there somewhere, if I remember correctly. And I just borrowed $3 million from Wachovia, who incidentally went out of business. Wells Fargo bought them up, and now Wells Fargo is actually now selling those loans, and the interest rates dropped 3%, like within, I think, 5 months or 4 months. My interest payment went down 3% of $3 million, $90,000. So almost immediately, I began saving $90,000 a year from shortly after getting that loan. I didn't anticipate that things were going to, go to hell so quickly, but they did. So you got to watch that interest rate like a hawk. Let's keep watching.
So what Patrick says here, now think about that. So from $500,000 and what they could have afforded last year, they can only afford for the same payment $350,000. That means essentially there's a 30% correction coming. Well, I'm going to tell Patrick something in a full.
Yeah, I don't know if that's exactly true, but he's predicting a little bit. But let's go ahead and listen.
In respect, and if anybody knows Patrick Bet David, please share this video with him. What he had, now he's correct on today's timelines, but what he's not accounting for, and I'm sure he already knows, Federal Reserve's already saying we need to get this Fed funds rate up to 4%, which will not stop inflation. I can't stress that enough. It's not going to stop inflation. It's all fake because the Fed would have to raise rates above actual inflation, near to or above inflation, to actually quell it. But they're not going to do it, okay? They're not going to do it. The market will crash before that. But before.
Yeah, I'm not sure why he's so confident in that numbers. One thing you can count on, the Fed obviously has misjudged the market terribly. They should have already done this. I can't believe interest rates have actually been as low as they've been for so long. The federal bank has this last increase. I thought it was going to go up a point. It went up 3/4 of a point here just like a week ago. They're set to stop it. They're going to stop inflation, and they're going to keep raising it until they do. This particular jump feels a little more significant to me. It seems like it's been a little more earth-shaking than ever. Just in the builders, I was visiting with my banker the other day, and he was saying everybody's shook as far as the builders are going. They're not building. They're not pulling permits. They're backing off. They're getting really concerned. And of course, there's more inventory on the market. And when the inventory goes up, meaning the properties that are up for sale go up, the prices tend to drop because when there's no inventory, it's basically a seller's market. Well, it's kind of turning, and now it's going to slowly start to turn into a buyer's market. I've seen this before. The interest rates go up, the prices go down. It's inevitable. That's what happens because people don't say how much, they say how much a month. Let's keep watching.
Before that happens, they're going to get the Fed funds rate to 4%. Do you know where a mortgage is going to be when it gets to 4? Let me give you an idea. I think right now it sits at what, 2.25%, 2.5%? That means a mortgage will be between 8 and 10%. It'll be 8 just normally. It will be 10 as banks price in risk and added things like you have to have an 800 credit score to get the 8%, or you're going to have to buy down your loan.
Look, I've got a whole box of notes, or I should say a book. See these notes here? These notes in here, most of these are me carrying paper on contracts that I've bought and sold. These are properties that I bought, and I bought it and I had maybe 10% interest. And then when I resold the property, I sold the properties for double or triple what I paid for them. But I carried them. I carried them at 8%, 9%, 10%. Primarily, mostly in that book are 10%. But interest rates have been falling from 12. But when I got my first really official bank loan, I got a 9 1/8% rate on my very first home that I bought. The reason I got the deal is because I just put a few $100,000 in the bank and opened an account at that bank. People that think the rates can't get that high, they don't know what they're talking about, or they haven't lived long enough to see it. So I don't disagree with what he's saying so far, but I don't think it's really possible to know where we're going to land, because the government does. You just can't. That's the problem, is the government does the most irresponsible things. You can easily buy influence, lobbyists buy influence, special kickbacks, basically, for lack of a better term, to certain group of taxpayers that others, like right now, they're subsidizing electric cars with a lot of this green bill stuff that's coming through. And so it's given an unfair advantage to the people that are making electric cars over the gas or over the used market. And let's keep watching.
Interest rate with a couple points just to get to the 8%. You tell me, please tell me in the comments where you think that the industry is going to get stronger and not absolutely collapse on its face. And get ready. This isn't the time to buy yet, because people that have been in the market for a long time, that have been on the edge of selling, especially people that have rentals, that have built up massive percentages of gains in capital gains, they're going to panic and they're going to dive those prices down, because you know why? They're going to think this is forever. It's not forever. It's going to be bad. It's going to be sharp. It's going to be...
So the people that own a lot of property probably are not going to be in a hurry to sell. I mean, the only thing that would motivate a person to sell to avoid... you're going to have short-term capital gains if you hold property for more than a year. But if you've held the property for more than a year, you're probably not going to dump it unless you fear that they're going to increase the capital gains. And so, in other words, like, I'll take my hit now and pay the lower gains, because if I sell it next year or 3 years from now, they're going to be higher. And people have those concerns at different times. Let's keep watching.
The opportunities. Today is not the day to buy. I'm telling.
Okay, look, I'm going to disagree with him. I actually have an offer right now. Listen, it's never a bad time to buy. You just never want to pay too much. You never stop investing. I'm like a Warren Buffett investor, but I don't play with stock. I buy real estate. And I'm actually waiting for an offer to come back in tonight that I made earlier today. There is no bad real estate. There's just bad deals. Don't make a bad deal and you won't get hurt. Now, you have to buy based on what the values are today, what somebody will pay for it today. Now, it's a little bit tough to gauge what the prices are when they're going to go down. There's no question they're going to go down. So if I buy something, I try to buy, 30, 35% under market. So 35% under today's market may be what the value is going to be in, a few months, in some areas. Some areas will do better than others. Some areas across the country have more stuff going for it. In other words, a lot of high tech moving in. People, some cities are really reaping the benefit of all the stupid stuff that California and New York does. There's people fleeing those areas and coming into other states like mine, Texas, and others where we don't have the state tax. And so they come in here and they're incentivized to spend, and they're overbuying. They're still paying too much for houses because they don't want to have to relocate. So they're the ones that are keeping the supply a little bit short here right now is the money coming in, people that are escaping California and New York. But, let's keep watching.
This isn't financial advice. I'm just a dude. I'm the worst real estate agent in the world, actually. Why? Because I couldn't sell anyone something that I knew was going to collapse, just like I did in 2006. But it's my humble, non-professional advice to wait. The storm's coming, and we're going to crush it. I want to warn as many people as I can.
He's talking to the masses, okay? If you're a retail buyer, I agree with him. Hold off. But if you're a real estate investor, then you just have to buy right. You just have to know what you're doing. People that are in my mentorship, we've all got a common problem. We've all got rid of our properties that we wanted to sell, in the last several months. And so myself and a lot of others, we're all sitting on a bunch of cash and we can't find anything we want to buy. The other thing that's making it difficult is a lot of us are looking for commercial properties, and anybody's we're looking for a 9% return. Well, right now the interest has gone up considerably from about 4 to 5.25 on getting probably 6 now, or 5.8 with the most recent change. The money's getting more expensive to borrow, and again, like I tell everybody that's in my class, you just keep pounding on these retail, properties that are for sale to lower their price. They're going to give. They're going to get scared. Some of them. The deal I just signed today, or I'm waiting to come in to be signed. I made an offer today. Basically, somebody that they want to get out before things drop, so they're motivated. And I want the property for cash flow. But let's let them finish up.
That it's coming, and we're going to have all that stuff, be able to show people how to buy with no money down and walk into banks and buy off their foreclosure list, just like I did way back when in 2001, but it's going to be better. All right, guys.
Yeah, I did a lot of that actually back in 1990. In 1990, I bought properties direct from the banks, and I'm telling you, I bought properties that were below building cost by not even a third of what they would cost to build. I bought properties for. I've seen duplexes sell for $28,000. If they were a VA repo, you could get you could buy it for $28,000, and then they would give you 25% back if you promised to put in carpeting and new ranges and that sort of thing. Even the property, I bought an apartment building. I bought a 33,000 square foot apartment building. I had it under contract for $400,000. I ended up getting it for $340,000. Because they agreed that if I put in $60,000, they would drop the price to $340,000. And that one I made over $1.5 million on it.
Don't stop and listen. Time is on a mission to eliminate all the snake oil and the fake gurus that fake y'all. He'll show you how to build an empire, starting with nothing but a desire. All you really need is a good mentor, not a used car bullshit. With time, you'll learn to crush it. Investing like Warren Buffett. With real estate, you cannot procrastinate. Everyone who hesitates is left at the starting gate. Hey, yo, so don't delay and join today. The mentorship and FlipAnythingUSA. Go.